You just got your property tax statement, and I'm going to share some ways to help you save money on this episode of Ryan Real Estate. Let's go. All right. You got that dreaded property tax bill assessment, and at the end of this year, 2024, you're gonna have to pay those property taxes. So you're gonna get your bill, you're gonna get your statement at the end of the year, you're gonna have to make those payments. So what can you do right now to help you save money? Well, I'm gonna walk you step by step of exactly what to do when you get the statement and what I would do if I were you. But before you do that, if you have not done so, take a minute, subscribe to our channel. We'd love to give you any valuable information we can, and we do so through this channel. All right, here we go. You get that property tax assessment, and here's what you need to do. Number one, you need to read through it thoroughly and make sure that it is okay. All the information is correct. Your name, your address, your square footage, is that correct? If it's higher, maybe leave it alone, I would. If it's lower than what your actual square footage is, that's probably okay, because that's gonna keep your value probably down. But you wanna make sure that everything looks okay, location, all of that. All right, that's step number one, because a lot of times if that's inaccurate, it's really not gonna help you as you go through the rest of this process. Number two, look at the exemptions that they are giving you. So there's homestead, there's senior, and there's veteran, and that's here in Texas. And making sure you have those correct exemptions on your tax statement. So homestead, in Texas, you can have one homestead per person, per family, in which you consider to be your home primary residence, because that comes with a significant discount on your taxes. If it's not there, I'll tell you what to do in just a minute. But you also have the over 65, you have a veteran, and there's a few other exemptions that you can take. And if you meet that criteria, make sure that you have those exemptions set up. If you have not, contact the appraisal district to make sure you get those done. The biggest one of all, of course, is the homestead exemption. If you do not have that down, you can actually backdate it from the time in which you purchased the house up to a certain amount of years back, and they'll actually give you a refund for the taxes that you should not have paid that you did because you did not have the homestead exemption on there. And moving forward, you want that homestead exemption on there, so make sure it is there, and I'll tell you why you want it, besides the fact of that discount as well. The third thing that I would do is look at what the market value is and then what the appraised value is. And if you have a homestead exemption, these should be two different numbers. The market value is what the tax office believes that your home would sell for if it were on the market. The appraised value is what they're going to tax you on. It's the taxable amount. And the reason these two things are different is because in the state of Texas, they cannot increase your appraised value, which is which they tax you on, more than 10% per year. So that means as your market value may increase, your appraised value cannot increase at the same amount if that market value is above 10% each year. And that's super important because that's going to keep your tax bill as low as possible. So make sure you're looking at the difference between your market value and your appraised value. Look at the year before to make sure they didn't go more than 10%. One other thing that I would suggest is make sure that you have your homestead exemption, but a little bonus is you can't have more than one homestead exemption if you have more than one property in the state of Texas. Number four, the thing that I would tell you to make sure you do is file appeal on your property taxes. Basically, you can do this one or two ways. You can hire a company, which is what I normally do, and they will fight on your behalf to keep your value low. They usually don't cost anything unless they save you money, and in which whatever amount that they save you, they usually take somewhere between 25 to 40% of this amount of money that they saved you. But you don't have to do anything. They usually keep doing year after year. The other thing you do is file an appeal yourself, which means you're going to present comparable properties to them to show that the value isn't what they're stating the value is. Usually this helps keep your value low, even if it's not a gigantic amount off of what they're stating the value is. The more you do that, the more you kind of keep holding that number as low as you possibly can. But those are the things that I would do when I get my tax statement, and I do it every year, and I would encourage you to do the same. If you have any other questions that you might have about property taxes, your statement, what you do, drop a comment, shoot me a DM, and we would love to help you in any way that we can. And as always, we'll see you next time on Ryan and Real Estate.